Hey guys, welcome back to the Wall Street Bull. Anthony here. I hope you're all doing well and staying safe and positive out there. Today is going to be a dividend portfolio update because, again, dividend stocks and dividend investing is my bread and butter. It is how I got started on YouTube. Go back and look at my earlier videos. It is hilarious. But we all have to start somewhere. And again, dividend stocks for me are my bread and butter. They do provide me with a form of passive income, which will never stop forever. All right, it is generational wealth. That is why I'm incredibly bullish on my dividend stock portfolio. But we'll get into everything. So make sure you stick around to the end of the video and I'll explain to you what dividend paying stocks are, what index funds are. We'll get into everything. Massive shout out and thank you to every single one of you who have subscribed to the channel. I really appreciate it. Thank you very much. I love talking with everyone in the comments and the community tab. So if you are new to the channel, make sure you smash the subscribe button down there. Turn on that little bell notification as well, because as you can see right here, I love documenting my journey with investing with cryptos, dividend stocks, growth stocks, talking about passive income, building financial freedom. And yes, my goal at the end of the day is to build generational wealth. So come along this incredible journey. We're just getting started. Also, if you can give this video a thumbs up, watch it straight through. It would really help me push this channel out to a lot more people because the YouTube algorithm is absolute magic when you find, ladies and gentlemen, do that. So make sure you give it a good old thumbs up down there. It's down there. It's free. Thumbs up. Thank you. You guys absolutely rock. Also, please do your own research and due diligence, as I am not a financial advisor. Everything with investing can be extremely risky and volatile, and I do not want to see anyone get financially hurt. That is why my number one golden rule is I only invest what I can afford to lose. And yes, we don't like to lose. You can lose money like that in the blink of an eye, all right? So please be careful out there. Do your own research and due diligence. This video is for educational and entertainment purposes only. All right, ladies and gentlemen, the formalities are out of the way. Yes, today is a dividend stock portfolio update because I think it's very important. I preach about talking about dividend stocks, but I haven't done one for a while because I've been so focused on cryptocurrencies. But dividend paying stocks provide me with cash flow. Cash flow is freaking king. Everyone needs to understand that the more investment you have, the more cash flow you will generate. All right, it's all well and good for cryptos, and I definitely want them to absolutely go parabolic. However, dividend stocks have been consistently growing for me, which is really nice. So let's go into my brokerage right here. I was going to say my exchange, but anyway, this is Stag. Again, I've been with Stag now for a long time. They're an incredible broker here in Australia. There's no fees attached. There is a referral link below for Stag. If you use that, you will get a free stock in Dropbox, GoPro, or Nike. I have a lot of stocks in GoPro. I have a lot of stocks in Dropbox, and I do have one stock in Nike. That one is pretty tricky to get a hold of, but I do have one in Nike. So again, thank you to all of my incredible subscribers. Now, you can see here, my portfolio valued is at $39,927.84 USD. Now, again, this may not seem like a lot, but for us Aussies to buy US dollars, we lose like 20 to 25% to our dollar. So this hurts, and it's taken me a long time to get to this point. I started with dividend paying stocks with about $300, and then I've slowly built this up to 39,000 US dollars. So again, this is pretty crazy, all right? I'm going to go through my portfolio. I'm going to show you my favorite stocks that I actually like, and I'll go through exactly what I'm invested in. Mainly dividend paying stocks. I do hold a couple of growth stocks. Now, for those of you who have no idea what a dividend paying stock is, it's quite simple, really, right? When you buy a company in the United States or in Australia or for anywhere that matter, you get paid a dividend if they're a dividend-paying company, aka ExxonMobil, for example. They pay a quarterly dividend, which means I receive money from holding that stock every single quarter. That is 4 times a year. All right, that stock, if they so choose, can put up their dividend price, so their dividend payment, so it can increase over time. I love that because, again, it allows me to compound not only my dividend investing, so my dividend payments, which means I reinvest them back into the stock. However, the stock price can go up in value as well, which I'll show you in a moment. But anyway, we'll get into that as well, and I'll show you some pretty cool stuff. You've got my portfolio down 0.48% today to $193 negative. Now, again, this is Monday to Friday, by the way, because the stock market's closed on the weekends because all the brokers like to go and have a weekend off, not like crypto, all right? I've had a total return of 21.71%, which is absolutely insane. Again, because I bought throughout 2020 during the pandemic, and I've seen some pretty crazy returns. Now, $7,120.88 returns is ridiculous. So, again, that's really nice as well. Now, I'll go to my favorite, obviously, dividend-paying stock, which is ExxonMobil. You can see it right here. This has been pretty wild, ladies and gentlemen. Again, I bought all throughout 2020. You can see the crash right here on the graph. Again, it is up 24% on the day. Now, I've made a total return of 76%, 4,035 USD. My current position is 9,330 US dollars. And of course, I've got 105 shares of ExxonMobil. The dividend yield is at 4%. You can see 4.04% right there, which is nice. I like a range between 2 to 5 max. Anything above that gets really risky, of course. Now, I do hold higher dividend yields than this, but ExxonMobil is one of my favorite dividend stocks because I've seen some pretty crazy returns. Now, when I say about buying dollar cost averaging, I invest at least 10% of my wage into this every week. And again, I will put more into this as I make more money, of course. But you can see here, 2020, you can see the price of ExxonMobil was $32. Now, this is where I continue to buy all the market right here, and it just has gone up in price. This is what I mean by compounding. All right, so again, me holding the stock has gone up in value, and me reinvesting the dividends that I'm paid every quarter increases my positions. Okay, so that's really nice. Now, of course, my other favorite here is Sphd, which is an index fund. Now, for what people don't know what that means, it is an S&P 500 ETF. So basically, there are 500 companies in the S&P 500. This particular stock, SPHD, buys a basket of those stocks. Out of those stocks, it picks the 50 top dividend-paying companies in the United States. And this is what this is. So by buying SPHD, you are buying a basket of stocks, a whole lot of companies. $44 a share. It is up 0.16% on the day. It has a dividend yield of 3.41%, which is nice. And again, my total position in this is 5,420 US dollars. And I've had a total return of 10%, which is basically standard. All right, so in an index fund, you average between 8 to 10%. Anything above that is unbelievable in the stock market. So again, I've seen some pretty incredible returns. But this SPHD pays every single month. At the end of the month, I get a dividend payment. So I'm receiving cash every single month. No matter what happens with the price going up or down, I receive that dividend payment, which is really nice. So again, SPHD is one of those. Now, some other ones, of course, are Qyld. Where are you here, ladies and gentlemen? Let me just zoom in here because it's a bit hard for me to see on the screen right here. But Qyld right here. Sorry, give me a second. Let me bring this up. If I can find it. Here it is here. Qyld. Again, this is a Global X NASDAQ covered call ETF. Again, I've invested quite heavily into these, and I'm just building up my position. It's currently sitting at $18 a share. I currently hold 679 US dollars in that, and I basically had a 3.81% return. $24. It's not much. However, what I like about this is the fact that it is a monthly dividend payer, and it's paying 11.66%. Which is insanely high. So again, I'm looking to acquire more of this to generate passive income. That is it. I just want more income as much as possible every single month. Qyld is definitely one of those. The other one here, of course, is Ryld. Let me just bring that up here. I'll scroll down right here. So again, this is another Russell 2000 COV covered calls ETF right here. This is a dividend yield of 12.08%. All right, so again, very high dividends, of course, very risky, but again, this pays out every single month. I currently hold 647 US dollars of that. I've had a total return of 2.53%, currently hold 30 shares of that one. And of course, the other one here in the Global X range is Xyld. So you can see right here. So this is the S&P 500 covered call ETF. So I'm involved in all of them. All right, so $43.95 a share, 10.67% dividend yield, which is crazy. Currently hold 15 shares of this, and I've had a total return of 2.29%. However, bearing in mind that I've only been investing in these for a short period of time as well, and I intend on accumulating as many shares as I can so I can get those insane dividend payments. Now, obviously going down here, ladies and gentlemen, I do hold some growth stocks, of course. Everyone knows Tesla. Yes, I'm a shareholder in Tesla. And again, this is priced at $864 US dollars, which is incredibly expensive to buy for us Aussies. and I bought this a long time ago. My current stake in this is $3,515 US. I currently hold 4 shares of Tesla, which is a growth stock. It does not pay a dividend. You can see here, dividend yield, it's 0.00. So this is purely for growth. I've had a total return of 85%, $1,616 US. That is insane. 85% you would not get anywhere. But if you go to the 3-year chart, you can see it's done nothing but go up in value. So I would have loved to have bought Tesla. If my stupid phone wants to work, let me just go here. So I would have loved to have bought Tesla at $86 a share. I mean, you know, it's just it's madness right here, but going up in value, it's just gone skyrocketing right here. And it did peak at one point in time in November 2021 at $1,221 a share, 2,500% return. That's like crypto stuff. So this is what I try to explain to people, you know, watching my crypto videos. I know it's very different, but you know, we get an average about 85%. That's just unheard of. All right. So in the stock market, 10 to 15% is wild. I mean, we get that in 24 hours in crypto. I mean, this is what I'm saying. But stocks are very different, all right? It's very, very different and regulated, of course. It's much more stable and less volatile. Now, of course, my other dividend-paying stock is EPD right here, $25 a share. This currently pays a dividend yield of 7.39%, which is incredibly, high, of course. And again, they are an oil and gas midstream company. They're the middleman, pretty much. I currently hold $2,153 worth of equity in this, and I have 83 shares. I've had a 9.92% return, which is absolutely fantastic. So again, EPD for me is really good. And again, 14% on the year, can't complain about that. Very, very happy with that one. You can see I've just been dollar cost averaging and the price has just slightly been increasing. So there you go. That's pretty much it for my stocks. And of course, let's go to my favorite part, the dividend tracking app. You can see it right here. You can see my portfolio is generating in Australian dollars, $2,358.99 per year, which is nice. Monthly is $196 a month. Daily, I'm earning $6.46 a day. And again, with inflation, that is literally just one cafe latte right there, or espresso, or a short macchiato, whatever you want to call it. At these prices, probably going to be, coffee's going to be outpacing now the value of my daily income. Anyway, moving on. I'm due to receive a dividend from AG&C of $2.23. Here are my top dividend pays right now. ExxonMobil pays me $537 a year. SPHD pays me $289 a year. That's every single, obviously, month. That's a monthly payer. ExxonMobil's a quarterly. EPD pays me $230 a year. Realty is a real estate investment trust. It is a REIT. That pays me $154 a year. And again, that pays out every single month. Not $154. This is all annual, by the way. So this is at the end of the year. Qyld is insanely creeping up to higher levels right now. It is ranked number 5 on my list, paying me $140 a year. AT&T is paying me $140 a year. RYLD is paying me $126. XYLD is paying me $112, which is really nice. Prospect Capital has not done anything with growth. Basically, it's just been stagnant. I'm receiving $108 a year. VYM is another index fund, a Vanguard fund at $92 a year. Stag is an industrial REIT that pays every month. $63 a year. Kimberly-Clark, again, pays me $35. I can keep going with all my companies right here, but the ones I'm invested in, obviously the biggest paying right there, which is obviously ExxonMobil. Now, I have a goal set of $100,000 a year in completely passive income. That is going to require me to invest $2 million Australian into the United States stock market. That will generate me $100,000 in passive income every single year. I've currently reached 2% of that goal because I've been highly focused on cryptos. If my cryptos go parabolic, the money's going into my dividend-paying stocks. That will provide me, my family, for income forever. That's it. That's straight up. It's just a never-ending cash machine. That's what happens with dividend-paying stocks. That's why I love it. 33% of my dividends comes from energies and miscellaneous companies right here, which is interesting, mainly energy companies. Dividends receivable this month. I'm obviously due to receive $106 in income this month. Now, this is what I really like right here. You can see my portfolio value in Australian dollars, $57,703, which is absolutely insane. I've had a total return of $9,127. Okay, 18%, which is ridiculous. I mean, it's just unbelievable. It's awesome. Absolutely love it. And again, I want more of it. Again, because I'm so bullish on stocks right now, I think they're better than real estate. All right. We don't have taxes. We don't have to worry about maintenance. We don't have to worry about land tax, all these other taxes, blah, blah, blah. No. Okay, this is what I love about dividend-paying stocks. It's completely passive income. Now, moving down to my favorite part. These are all my holdings right here. And you can see at this chart at the very bottom, the power of compounding. It takes a lot of patience. Now, in 10 years, my portfolio is going to be worth $108,171, and it will be generating me $8,272 a year. Apologies about the email. Now, again, that's if I don't reinvest any money. So basically, if I just let the portfolio compound by reinvesting the dividends, I don't take any money out. That's the most important thing. You need to reinvest the money that you get paid from these companies. Otherwise, the portfolio is not going to grow. Also, I'm going to continue putting money into this every single week and every month. And if I have large sums of cash, they're going to get thrown into this as well. So I want to really start speeding this compounding up, all right? So the crazy thing is, in 20 years, the portfolio is going to be worth $384,000, and it will pay me $51,675 per year, every single year, no matter what happens. All right. So again, the only thing that can happen is the company can cut their dividend, which happens very rarely. But the main companies I'm invested in are massive companies, of course. All right. So again, they're not likely to cut that dividend. But $51,000 in 20 years. I mean, think about that for a moment. That's going to be roughly around nearly $400 a week, all right? And that continues to grow, calculating a 5% annual dividend growth rate and a 2% annual stock price growth. So it just continues to grow. This is what the top 1% do. They buy investments like this. That's facts. Now, you can see here my dividend income every month. You got $162 for May, $300 for June, which is crazy. Moving down here, my next big dividend payment is going to be, I can see that in September, which is nice. October is going to be $114, November is $160, and of course, December is nearly $300, which is nice. And it just continues to grow. Look at that. So again, I need this to get up to at least $3,000 to $5,000 a month. All right, that's what I really want, to get it going, to start moving that compounding really fast. But that's pretty much it, ladies and gentlemen. That is my dividend stock portfolio update. Thank you very much for sticking around to the end of the video. Let me know in the comments below. Again, it's very different to crypto, but I had to give an update because I am a dividend stock investor as well. All right, stay safe. We'll speak to you soon. We'll speak to you tomorrow. Peace, babe.